So technology tends to flow in cycles, and it's, again, history is written by the winners. It's usually determined by the people who control some form of innovation and benefit from it. So the thing I love about Jim Simons, totally iconoclastic, totally not what you would expect to be a quote unquote great investor. Mm-hmm. And someone asked him one day, he said, you have a model that uses the price of butter in Botswana. That has nothing to do with the S&P. He says, yeah, I know, but it's about 95% accurate in predicting the price movement. So I'm going to use it until it stops working.
Hey guys, welcome to Everyday Finance. The rapid flash crash that occurred on Sunday, which occurred in less than 10 minutes and totaled over 2%, wiped out billions of dollars in market value and renewed debate regarding the dominance of Bitcoin's oldest whales. Willy Woo, an analyst, has observed that BTC holders who purchased the cryptocurrency in 2011 at a price of approximately $10 now possess incredible power. Each coin that they sell necessitates the injection of more than $110,000 in fresh capital, hence generating significant obstacles for the ascent of Bitcoin within this cycle.
So what makes a good investor? Well, it's in my pinned tweet on Twitter, right? The greatest wealth comes from investing in innovation. Investing in that means you have to invest in something that you believe in before most even understand. And you'll be mocked and ridiculed for that non-consensus action, but it's totally worth it. So there's a bunch of parts in there that are important. One is you have to truly believe in it. So you have to do work. You have to, form that hypothesis. You have to test that hypothesis. And my hypothesis testing was never like, I'm going to sit in a dark room and think of the next great thing. That's what I'll call a big E entrepreneur. I'm a little e entrepreneur. I like to look at new stuff and say, how's that going to make old stuff better, right? How is the internet? I remember 1996, I'm in South Bend, Indiana, working at Notre Dame. And we invested with this firm called Sequoia, which back then was not famous. Today it's famous and they're amazing. And they are amazing. And they were still pretty darn good back then, but they weren't amazing yet. Don Valentine was a legend, but Michael Moritz had never done even a deal yet. And so we invested, and they invested in a couple early companies, one Yahoo, and this little company called Google. And I remember my board at Notre Dame saying, that is the dumbest idea. That's a dumb name. Like, now it's a verb. And by the way, that is, and this is appropriate given we're recording this on the day that Jamie Dimon reversed his, it's a fraud. Okay, now you can. Right. So you can judge the quality of an idea by the quality of its detractors, right? If people that you don't really care about don't like your idea, it may or may not be a good day. But if people you respect and admire don't like an idea, it probably has merit because they're worried about losing, right? They're being disrupted. And so my board at Notre Dame, look, they had donated a lot of money and names on buildings all over the campus. They were like, this is stupid. And their point was, why would you invest in the 21st search engine? That was a logical question, right? There was Web Crawler and Alta Vista and Ask Jeeves. What do we need number 21 for? What they missed, and I didn't really understand at the time, they didn't invent a search engine. They invented a whole new way of accessing information. Here's an amazing stat. In 1991, there were 0 websites. Tim Berners-Lee came along, wrote 8,400 lines of code. Now we had 1. Today, and counting, I'm going to be off by a little bit, but there's about 1.7 billion websites. Google owns half of them. Whoa, what are you talking about? Well, here's how it works. Every time you type a question into the search bar, it takes you immediately to a website that already has all the answers because lots of people have asked that question before. Now, if you happen to ask a unique question, which is really hard to do, it'll have to create a new website. And so they don't, think about it. If you type a question and had to search the internet for the information, it wouldn't work. So the original search engines, as they grew, got slower and slower and slower, and Google just kept getting better and better and better. Because the more you do it, the more indexing you have, the better you are at it. So they invented something new. But I'll call that a little e invention, right? Maybe some would call it a big E, but to me, it just made the idea of search better. And so, our little 500K turned into $200 million. And the light bulb just went off. It's like, wow, never done that before. What? And then I started really thinking about it. And what I realized was there was this cycle. And now I'm going to answer your question. So in our lifetime, we have seen a truly exponential increase in technology and quality of life, right? I mean, for thousands of years, maybe tens of thousands of years, humanoid forms struggled to survive. No grocery stores, they had to hunt, they had to, carry the fire around. And then it started to get better, and each innovation, whether that was the ability to create fire with a match, or whether it was the ability to harness the power of the sun or a neutron, whatever it was, each innovation made you a little better. And 100 years ago, there were almost no cars. Interestingly, most of them were electric. No one talks about that. And then Henry Ford and John D. Rockefeller basically buried that technology for 100 years to sell oil. Because here's the crazy story. John D. Rockefeller, had Standard Oil. Well, he didn't have Standard Oil like we think of oil. It was kerosene lamp oil.
Yeah, exactly.
We didn't have electricity. And so he had these kerosene lamps, and he would pull the oil out of the ground, he would strip out the kerosene, and he would flush the effluent into the river. So think about that. All that sludge from the oil would go into the river, and the river would catch on fire, which was kind of bad. And, Henry Ford comes along and says, I've got an idea. I designed a horseless carriage that wouldn't use battery technology. It's going to use grain alcohol. And John D. Rockefeller said, Hank, it burns like needs combustion. I got the stuff, right? And it's free because it's coming out of my kerosene plant. So we'll use that. Forget growing corn and making ethanol. Okay, that was later. And the rest is history, right? In 1904, the biggest car company in America was the American Electric Vehicle Corp. And it took 100 plus years to get back. So technology tends to flow in cycles, and it's, again, history is written by the winners. It's usually determined by the people who control some form of innovation and benefit from it. So
there have been reports that a huge whale moved billions of dollars from Bitcoin to Ethereum, which caused the current price drop. More than $2 billion worth of Bitcoin, or over 24,000 BTC, was transferred through the Hyperlid platform by a single wallet, with a significant portion of the Bitcoin being exchanged for Ether. This resulted in a cascade of sell orders, which caused Bitcoin to go below $113,200 for a brief period of time, while Ethereum fell by 4% in a matter of minutes. It was not enough for the whale to simply rotate. They also staked significant quantities of Ethereum and opened leveraged long positions, thereby anticipating the reaction of the market. According to estimates, this single move resulted in a profit of $185 million from the swing in the BTC-ETH exchange rate. Considering that they still hold control of more than 150,000 BTC, commentators are warning that additional turmoil may be on the horizon.
This cycle of progress started to accelerate. Computing came along, 1954, and I'm, again, luck, total luck. My life is this cycle. Now, I wasn't born in 1954, but my dad at the time was selling and installing mainframe computers. I came along in 1963, and 5 years later, there's an innovation in Silicon Valley around the microchip. And suddenly the center of the universe shifted from Boston, Massachusetts, where it was with Unisys and Burroughs and Digital Equipment Corp., to what is now Silicon Valley. And then I grew up in Seattle. So in 1982, there's an innovation around the personal computer. And Steve Ballmer's mom famously quipped, "Honey, why would you work for that company? No one ever wanted a computer in their house." Well, why did she say that? Because the Digital Equipment Corp CEO, remember, judged the quality of an idea by the quality of its detractors, said no one wanted a computer in their house. He has 18 billion reasons he was right, mom was wrong. Look, I grew up in Seattle. Many of my friends don't work anymore. They were smart enough to go to work for Microsoft. I didn't. Now I defend myself saying, if you look at the picture of the original Microsoft 11, you wouldn't work for them either. And they're multi-billionaires. I'm not, so I shouldn't make fun of them, but it's a funny picture. So 1996, we got the internet with Yahoo and eBay. Remember eBay? My board said,
Yeah.
What are you going to do? Invest in a garage sale company? Not, okay, it is a garage sale company, but it's a big freaking garage.
Yeah.
And, if you got a garage on your street, not many people passing, not going to work. If you got a garage where anyone in the world can see it, Yeah, better price discovery, better market. So if you take a piece of every transaction, that's a lot of money. So the internet came along. Then in 2010, now why is it always 14 years, Aaron? It's always 14 years. It's always 14 years because young people invent everything.
Right.
Because us old people, we're not going to invent something new. We're comfortable. We like what works. We don't want new stuff. Like my dad, 87 years old, doesn't have an ATM card. It's like, nah, I go to the bank.
Wow.
You go to the bank. Like physically, why would you go to the bank? Just use an ATM. No, that's not what. So old people aren't going to invent. So young people, Mark Andreessen, 19 years old, Larry and Sergey in their 20s. I mean, just go through the list. I mean, Bill Gates, he looked like he was 11. And when you look at that picture of Microsoft, I mean, he was like 20 something, but he looked like he was 11. Yeah. And young people don't know what they don't know. And so they invent stuff. And that's about half a generation. 14 years, about a half generation. And not every generation is motivated to, invent. And we've heard the fourth turning and all that, and it's all real.
Great book.
I mean, so that cycle, 2010, the mobile net. I actually remember being back in Seattle at Craig McCaw's family office. He was hosting a dinner. And Craig was a famous investor in the early days of Saylor. He was giving them to all the drug dealers. Not personally, but that's who he played. Yeah. And I remember asking his family office guy, I think the mobile net is going to be as big a deal as the internet? He's like, Mark, are you joking? Ask people if they want a computer, like whatever. Ask them if they want a phone. They're like, well, I already got two. I probably don't need another one. Yeah, the mobile net. And my aha moment there, and to me, aha moments, if you act on aha moments, that's how you be a really good investor. So my aha moment for the mobile net was I was sitting at a traffic light in my town in Chapel Hill, just about 90 seconds, right? Sitting at a traffic light, and I went to Travelocity and I bought a plane ticket. I'm like, okay, I'm in. I'm all in. If I can buy a plane ticket in 90 seconds from my car, e-commerce is going to be a big deal. So, and there's a great video of Michael Saylor talking about this, and he actually wrote a book about this, about what today is FANG or the Mag 7 15 years ago, when they were $100 billion companies saying they were going to be $1 trillion companies someday. And people were like, what are you talking about? And he had the 70s look of the hair and
shaggy hair. Yeah.
It's so anyway. So I watched the one he did on Apple yesterday and it was amazing. He's like, look, they have 4 billion units. They have about a 4-year average life. That means they're going to sell 1 billion units a year. That's a big network. That's going to be valuable. So again, it wasn't really that hard. So anyway, fast forward to 2024, last year. I got the truth net. Now, what's the truth net? My other aha moment that matters, and then I'll stop talking, is, again, I observe. I mean, I read a lot. I surf a lot. I look at ideas. I listen a lot. And remember, in the information age, before the information age, it was about getting access to information. So if you were better at getting information, you were a great investor. Then there's a guy, Richard Driehaus, famous investor in Chicago, big, crazy hair, looked like the absent-minded professor, super successful. He was the first customer of a company called NewsEdge. So he was getting information on small cap stocks kind of before everybody, again, not in an illegal way. This is actually pre-insider trading, but because he had the information before other people signed up to NewsEdge. And all of his stocks look like hockey sticks. Because remember, if you buy here and other people find out, they'll push the price up. And when they're small cap, they're illiquid. So he had an information advantage. Well, then what happened? Well, then everybody had NewsEdge and Bloomberg. Well, then what happened? Ken Griffin came along and said, I'm going to move my computers closer to the exchange so I can trade faster. So high frequency trading was born. And so then it became an analytical edge. So either you're a rocket scientist, like literally, and the thing I love about Jim Simons, totally iconoclastic, totally not what you would expect to be a quote unquote great investor. Mm-hmm. And someone asked him one day, he said, you have a model that uses the price of butter in Botswana. That has nothing to do with the S&P. He says, yeah, I know, but it's about 95% accurate in predicting the price movement. So I'm going to use it until it stops working.
In the meantime, XRP is under its own pressure as it faces the challenge of breaking above the psychological mark of $3. Following a peak of $3.66 in July, the value of XRP has dropped by more than 20%, and has dropped by 4% in the next 24 hours, and it is currently trading just below $3. Despite the fact that the $2.95 support level, which was a level of resistance in 2021 but has since shifted to a level of strong support this year, analysts continue to maintain their optimism. Based on Fibonacci retracements, Avi Harkin suggests that the price might reach a higher level of $4.44 or even $4.62 in the future. Additionally, bullish chart patterns indicate that there is a possibility of a surge towards $5.80, a failure to maintain a price of $2.95 might open the door to a decline towards $2.40, which would be in line with the 200-day exponential moving average and heavy trading zones for the years 2020 to 2021. For the time being, the focus is on determining whether or if XRP can regain $3 and once again ignite momentum.